Well, I think you've effectively hit the head on the nail for the immediate reason. I mean, any commodity that has this parabolic rally that gold and silver had, and the new entrants into the market, which they were flooding in, and have been for many, many months now, it really does invite A, volatility, and B, profit-taking stroke liquidation on any news or developments that run counter to gold. And we had a couple of them within a few days, and it really did give us a big and deserved, I think, correction in both gold and silver.
James, you've been at this precious metal game for decades now. Just put into context the volatility both on the upside and then the downside on Friday. There's a handful of days saw just extraordinary volatility. Just put that into context.
Well, yes, you're right, and it's extraordinary, and so was the rally.
Yep.
We were talking about gold made a 54, I think, new highs last year.
Right.
And people were talking about a new high, and I always cautioned everybody. I said, look, it's not a new high until we go above, in real terms, what it was in 1980. In January of 1980, gold hit $850 an ounce. And that's about $3,400 in today's money.
There you go.
And they did that in April last year. And then I said, okay, now we can genuinely talk about a new high. We can genuinely talk about a real rally. And the difference between now and 79 was a limited number of buyers at that time, Hunt Brothers especially, in silver, but also a much more broad-based church this time. Right. A lot in it, but the volatility nonetheless. And to look at it this way, we had a swing in a couple of days that was equal to the absolute number that gold was trading at when I started covering it.
Wow, that puts it in perspective, right?
Yeah.
So, it's just when you look at where we've come, I mean, gold topped $5,500 an ounce last week. It's now at about $4,750, I guess, spot gold. Silver wiped out 30% of its value in just 3 days. Do you have a target for gold by the end of this year? Because for many who had their target at 5,500, well, it already blew past that in just the first month.
Yeah, our high for the rest of the year is 55. We have an average, which is almost where it is now, and we're expecting a very wide range. Good news could take us down closer to the $4,000 level. But what we think will likely, the research view is that we have a moderately softer dollar this year, according to our FX people who've been pretty bang on that. And also we would, I think, very likely see a resumption in a greater central bank buying. I mean, they are the ones that kicked off the genesis of this rally back in 2022. If you look at it this way, in 22, 23, 24, almost 1 out of every 3 ounces of gold that came out of the ground went into a central bank vault. Double or triple the average for the previous 10 years.
That's incredible.
Yeah, truly.
So when I think about a commodity, let's just take oil. Prices spike up, they start drilling holes in Texas. What happens when you see gold just spike up? I mean, they don't start digging more mines, do they?
No, well, not in the near term.
Right.
Again, when I first started covering the markets, by the time a group of geologists said, I think there's some gold here, to the time when it went round your finger or your neck, was about 10 years.
Wow.
Exploration, dig permitting, et cetera, it's closer to 20 now.
Really?
It takes a very long time. It's highly capital intensive, and the low-hanging fruit has been picked. Mm-hmm. So we're going into different regions and areas. What is flexible is recycling, because gold, unlike oil and grain, is never consumed. It's stored somewhere.
Right.
It's either
around your neck or
on your neck,
exactly.
in a central bank vault, in a vault some other place, in a bar, in a coin. And that's what can be mobilized at fairly short term. Now, what we've noticed is that we haven't seen the response on the recycling side. It is higher, but it's not as high as I would have expected. And it's rather like owning a home. If the market keeps going up, you may refrain from putting your flat on the market. Mm-hmm. But when it comes down a bit, you might then say, okay, maybe we've hit the high, I should sell now. So we may see a pickup in recycling.
You know, I just wonder, I mean, outside of just of investors, what is the larger impact on the economy? The fact that we have gold prices, and we do use gold in different ways every day, the gold and silver prices being as high as they are, even despite the pullback we saw recently, they're still relatively high. What is that impact on the broader economy?
Well, it has been good for jewelry, simply put. Jewelry is often about 50% of physical gold demand. We calculate that last year it was only 35%. It's been down double digit. Also, there's a reduction in coin demand. But generally speaking, gold does not have huge macroeconomic impacts. It reacts to macroeconomics.
Right.
It doesn't set. It's not like oil. It doesn't set the stage. It reacts to the stage. And that's why, you've got to pay attention, because the gold price does tell you that there are geopolitical or economic risks. They may not materialize, but
right.
The geopolitical risk index is fairly high and persistently high.